Right, so this is FXC trade setup, and I think today will be the last day, which is Friday of trading for the first start month of July, getting the month of August soon. So this is gold. Well, I think have made about 5 wins, 5 wins this week. Yeah, 5 wins, and I think just one loss again, the 5 wins. So I took 6 trades and one loss, and the rest are absolutely clean wins. So let's give it a try. So today we're going to discuss on key levels, how to spot the valid key levels, the best key levels that actually work in the market. So today we're going to discuss on how to spot and also a valid key level, let's say in a higher time frame or in a lower time frame. So we have up to 2 to 3 types of key level. Number one, we have, let's say, the highs and low, right? There's a high, there's a low. So these are what key levels where we're price might what likely come and reverse. Looking for entry here with my entry model. My entry model is absolutely simple, and it's, let's say, the most easiest part. If you watch my videos, you will learn more about my entry model. And my entry model, let me say, are not hard. They are not as as hard as other trading strategy, because I actually find this strategy and it's absolutely working for me. So we have two types of key level. Number one, we have the highs and lows, which is the swing high. Let's say, sorry, a high is something like this, high and low, right? So these are key levels where we might likely would see reversals, but to next, just like the external. So these are our external range where we might likely see reversal towards the internal. We might likely see reversals to the internal. We want price to get to key level, we are looking for reversal to the internal. So then we also have other blocks. Other blocks, all you guys know much more on other blocks. A candle that dogs the low, something like this. Sweep of the low. The best order block is not just an order block. You understand? We just wait for price to reverse and push. No, that's not the best order block. The best order block I will ever advise a trader to use is a candle. Let's say we have a low, something like this. The dog give us push. So we got the sweep of what this low here, right? We got the sweep of this low, and that the last candle the candle that swept the low is now our order block. We're now expecting price to give us a retracement to this key level, and what we'll look for a buy opportunity from there. And also we have a simple way to get another block. It's another block that mitigated a candle that mitigated order block is also a valid order block. Let's say a candle like that mitigate a order block here is also a valid order. So we are expecting price to retrace to this key level and what push high. I think we took something like this on gold yesterday, the NFP Thursday NFP on gold. So we took something like this. So these are order block that you need to put most your eye on. Not order block that does any order block that doesn't sweep low and you use it. It's an invalid order. The price might move, let's say, move 50% and won't reverse back. You understand? So any order block that doesn't sweep or dog a low is also, let's say, a fake order block. The best order block is what? A candle that dogs a low. The candle that dogs a low, like this one here. That's the best order block. And also the second best order block is a candle that mitigates another block. A candle that mitigates order block is also a valid order block. We might see some retracement and what push higher. So these are the best. These are a key level we can spot in on what, let's say, an internal range, not an external. No, external is or deal on highs and lows, something like this. Let's say something like this. Yeah, something like this. A high, a low, and a high. we're expecting a reversal to a key level in the internal to push higher, or we're expecting a reversal towards a low, towards continue its directional bias. So that is how the strategy is. It's very simple. So these are entry models I normally use in my trades, and they are absolutely working for me. So secondly, we also have a fair value gap. Fair value gap is the most important part in trading. A fair value gap, you guys know, let me see, know much more about fair value gap. Fair value gap looks commonly like this. Fair value gap here. Let's say we have a gap here. This is a gap. So that candle that mitigates that fair value gap is also valid as another block. You don't need to wait for that sweep for you to, I have 3 to 4 different types of entry model. These are entry models. Let me say key levels you need to be marking out as your. Let me say, okay, not even entry model. These are key levels. We discuss more on key levels, not entry model, key levels. So these are key levels where we see trades. I spot in trades. I take trades. You understand? So fair value gap is also one of the best. Let me say fair value gap is the best. To be honest, fair value gap is the best key level ever. I've ever take trades from. Fair value gap is, let me see, the best one. I've been trading with fair value gap, and I've been seeing a lot of trades, positive trades, no negative trades, or the positive trades. So that is how key level. Those are my key levels I actually refined, and I'm using them apparently like always 247. I use such key levels for entries, and also key levels as well. So first of all, for you to spot all those my key level, you need to understand the directional bias of the chart you are actually reading at. If it's an up, if it's down, then you go down. If it's an up, then you look for key level that's gonna be pushing price down. If it's a down, you look for key level that's gonna push price down. You need to understand the volume of the market. Which one is it, the buyers or sellers? Which one is stronger? You need to understand the volume of the market and how the market moves. If the bullish are stronger, then you are bullish. If the bearish are stronger, then you are bearish in the market. So that is how you can actually take trades with key levels. So let's give an example on gold. I love trading gold, and gold is actually giving me the exact thing I want. So now let's start from this key. Look at how from external to internal. So look at this low here. We got this low, this old low, right? Is it this old low? Price took out this old low here. This is a low which we all expect reversals. So this is a low. Look at how price took out the low. Look at it. Let's take a look. Notice how price took out this low. Look at the wick. You notice how price took out the low and rejected back from there. Remember, we don't have any key level here. There is no key level, so price took out the low and rejected back. You understand? So those are, let me see, this is my key level, highs and lows. Let's look at another example. Let's look for another example. Look at how price took out this high. Look at this high again. Look, see how price took out the high. This one here. I'm just going to teach you only key level, and also stuff like that. So you notice how as price came, took out the high. You understand? As price came, took out the high. What price did? Price retraced back, reaching to another low. Price reached to a low, and reverse again. So now those are my key level. Those are models that I use towards let me say take trades. These are key levels where I normally use, as explained earlier. Key levels, you just need to fix your eye on key levels, right? As price took out, let's take a look at it. They aren't equal. Look at it. Price took out the low and rejected back. So this is, let me say, this is smart key level. Price didn't react from any key level here. We only took out the low. So these are my own best key level here. Lows. as you said earlier, lows. You notice if price take out a low and doesn't reject back, then that key level is invalid. But lows are my best key level. So those are areas where I normally look for what trades. You understand? Highs and lows are areas where I normally look for what trades. So now we have this. Let me show you another one here that I actually used. I think we have this. Where's the low? Okay, I think this is not on the pair, but this, let me it's just an example I'm trying to give you guys. Mark out your highs and lows. Once price get to those areas, look for what trade entries. Now we have this key level again. That's, I think, price need to reach this high. Let's mark it out. Yeah, so these are key levels where I'm actually looking for what reversal. So now, right now, price is now ranging. We now have a new key level here. You see, we are since that high has been taken out, we now have a new key level here. Price took out the highs, the lows of this key level. So now we reversed inside the range, from external range to internal. So now we are no more playing the key level model in the internal range. What are we playing inside the internal range? We are playing fair value gaps, order blocks, breaker block, mitigation block. So, but I don't use mitigation block, I don't use breaker block. I use order block, a valid order block as explained, and also a fair value gap. So those are only the two key entries I normally use. Those are key levels we normally play in the internal range. The external range are what? Highs and lows. So we now have magnets that's actually drawing price from external to external. So we now have, as price took out the external, so we now what? Play the internal range. Let's say let me say the internal, playing the internal fair value gap. Let's say, for instance, look at this fair value gap here. I took this one. I think I shared this straight on my YouTube channel, and on the YouTube, look at this fair value gap. Price came to it and what? Push higher, right? And also we have this fair value gap again. Look at this new fair value gap. Look at how price respected this fair value gap here. Price came on the fair value gap and what? Push higher. So those are key levels where we normally mark. So now we have a refined, fresh fair value gap that price is actually reacting from. So what are we expecting for gold to do? We all expect a buy from this key level to where? To the external. We are now buying from here to what? To the high. We have this high. This high. This is now our target. That is now our target. The highs. So we are now waiting for that confirmation, but there's no confirmation, and I'm not going to take this trade due to it because it's Friday. I'm not going to take this trade. It's Friday already, so price already my key level, so I'm not going to participate in this trade. So we are now, or I think the NY's new section is now opened, and I'm not going to take this trade. So I'll be off for today till Monday completely. So these are, let me say, things you need to know in the market from key level to key level. You play the external key level and also play the internal key level. We are now moving from here to what? The highest point where price need to what? I think we are moving from here to 3,453.203 on gold. So that is where I'm actually moving into. So for you to watch my, learn more about my strategy, just comment on place a comment on your comment section, and also I can also reach you. You can also reach to me. You can also learn from my strategy privately, and also let's win together. Well, this is my first, let me say, my fourth video on YouTube, and which I'll be really glad for you guys to learn and also rewatch this video. Thank you guys.